our foundation. There are many mediums for doing that. So there are the tweets and the videos, everything else. So I have finished my presentation of the ISB update, technical update. So Bohat, shukriya for listening to my presentation. Shukriya. Thank you. Bye.
Okay, I would request the people who are outside also to please come back in, because you are going to be missing an important part of the day. We will be actually taking question and answers live with the technical director of IASB, Henry Rees. Okay. Hello.
Hello.
Okay, Henry, can you hear us?
Hello. Can you hear us? I'm Henry Rees, and I'm joined by my colleague that Chung mentioned in his presentation, Umar Shahid. So he's joining me here. We're obviously videoing in. We're very pleased to have the opportunity to do this. We're videoing in from our new offices, which we moved to last August here in London, out in the East End in the Canary Wharf, the former Docklands area of London. So I hope you can see us and I hope you can hear us.
Yes, we can do both, here as well as see you. Thank you for joining us. So I would ask the floor, if you all have questions, please.
Hello. Can you hear me?
Yes, we can hear you. Thank you.
Okay. Henry and Shahid, thank you very much. My name is Farooq Rahman. I am the chairman of the Accounting Standard Board in Pakistan. All this morning, it's about now 6 hours, we have been going through IFRS 9, 16, and also discussing about the digital financial reporting. So it's kind of towards the end of our day here, and on a lighter note, we are having an overdose of IFRS. But a big thank you to the ISB board member who gave us a very detailed and good insight into the developments and updates, what's happening at the ISB level. In particular, we noted the work being done in respect of primary financial statements, because the new subtotals and updates, I think that is something very important as far as giving flexibility to the companies to present their performances in a manner which is more flexible to them. Also, we noted the work being done with respect to development of some standard on business combinations under common control, because this is one topic that is in the absence of any guidance from within the IFRS. This is one topic, because here in Pakistan, the merger transactions within the common control is quite like these are happening. So development of such standard will certainly be very, very helpful for at least in Pakistan context. Also, in relation to the update on many other accounting standards and the management commentary as well. I think that is also something, although that is voluntary, but probably an update on that would also be very beneficial for the people here in Pakistan. In our morning discussion about the IFRS 9, particularly we have in our jurisdiction specific to Pakistan an issue arising that is about circular debt. Let me explain what circular debt is. This is mainly in relation to the supply of electricity, where in terms of the revenue being collected on a national basis and the cost incurred for doing that, there's a difference. So that difference gets accumulated in a government entity, and which has an impact in the chain who's supplying the energy to maybe in the form of oil, gas, and that goes up to within the chain. So one entity has not paid to the other entity, and accordingly the other entity has not paid to other entity. But all these transactions involve sovereign guarantee as well. So in terms of this circular debt, although these are all current payable, current receivables involving government entities, and because of long outstanding nature of those receivables, though currently receivable, an element of time value of coming is arising because of IFRS 9. IFRS 9 in Pakistan, we have adopted it, and the first financial statement, the annual financial statements will be coming for 30th of June 2019. It's a 6 months lapse from the international applicable date. So this is one question because this is impacting all the state-owned entities here in Pakistan. So this is one aspect. There has been more than one view whether to bring in the sovereign default aspect into this when there is an asset as well as the liability corresponding. So this is probably one item we maybe separately think about writing either to you or to IFRIC, or you will see at which forum. So this is one item like we have been discussing in the morning part. So I just wanted to highlight that. Just in terms of a question, or probably if you can give us more insight, is in terms of the applicability of IFRS 17, because recently the ISB extended the applicability of the standard by 1 year. And as you know, this is one standard which probably we require some time to really get adjusted to understand and get its application around the insurance industry. So is there like talk about further extension, or are there any matters where there will be more like amendments? I noticed one update was mentioned by the board member, but if you can further give us a brief. Just before closing down from my side, I just wanted to update you that Pakistan is one jurisdiction where it is an IFRS jurisdiction, but because of very few differences that remains in terms of the local law, we cannot call us 100% or can give an unreserved statement, though that option is available voluntarily. But in terms of the legal requirements, we are still not 100% or a qualifying unreserved statement country, but we are almost there. So this is just to give you a perspective here. Thank you.
No, well, thank you very much for your comments there. Shall I just briefly respond to them? I'm sorry, there's a bit of an echo on the line, so I'll try to ignore that. So let me just pick up on your last point about IFRS 17, our new insurance contract standard. Obviously, that was issued, a little bit a while ago now. It had an original effective date of 1st of January 2021, that was actually, you know, a long period of time from its issuance day of May 2017, to allow for the fact that it is a major new standard affecting insurance companies and others who have insurance-type products. And obviously it was going to require a significant implementation effort. So the board set that long implementation period. Now, as you heard from Chung Woo and saw on the slides, as with all of the new standards that we've issued in recent years, we have been very active in supporting implementation of IFRS 17. And I think you heard in the presentation a little bit about how we had a transition resource group, which was a group that was designed to talk about some of the questions that were arising as companies and their auditors were getting to grips with the new requirements. And I think we were always aware that given the complexity of insurance accounting and the scale of the implementation effort required with IFRS 17, there were always bound to be some questions there. The board has been doing a lot to listen to stakeholders, and actually since about October time last year, the board has been effectively analysing all of the questions and issues that they've heard through this implementation phase that we've been going through with IFRS 17 to decide if there's anything that they need to do with respect to IFRS 17. And I think, as you alluded to there in your question, so the board is doing two things. So first of all, the board has decided to effectively extend the implementation period and defer the effective date by 1 year until 2022. And that's linked to the fact that the board is making some very targeted, narrow scope amendments to the standard. And so the board has just concluded on making these amendments in terms of putting out an exposure draft at the end of June. So these are proposals that will be coming out at the end of June for yourselves and other stakeholders to comment on, together with providing feedback about the board's proposal to defer the effective date by 1 year. But I think it's really important to remember here that the board has been approaching this whole question about whether they should make any amendments to the standard in the context of saying that IFRS 17 is a very much needed standard. You know, this is a significantly improvement to existing insurance insurance contract accounting, and it's really required. And so therefore the board is proposing amendments to the standard that are very targeted, very narrow scope. They do not affect the fundamentals of the IFRS 17 model, so that it doesn't disrupt people's implementation progress. I think the board is very committed to seeing IFRS 17 being implemented as soon as possible, and therefore I think there's absolutely no plans at this stage to extend the effective date beyond what the board has already decided. So I'm glad you asked that question, because I think it just highlights, the fact is that one of the things that's changed at the ISB over the last few years is that the board has gotten much more active in its work supporting the implementation of the new standards, and also I think the work that we do through the Interpretations Committee as well. I think that's getting a higher profile than it had in the past. So you raised an interesting question about IFRS 9 application, and certainly, if you think it would be helpful to your stakeholders for the Interpretations Committee to consider that question, then you should certainly consider submitting to it, because the Interpretations Committee is a very thorough and transparent process that we have that can really help clarify the application of the standards in those cases where there might be debate about how the requirement should be applied. And I think our website explains the process, but obviously, if you wanted to have a separate conversation about that before considering whether to submit the question, you could always contact us and we'd be happy to have that discussion. And I'm glad also that you picked up on some of the board's important projects there. I agree with you that I think the primary financial statement project is an incredibly important project. I think that there's a lot of lack of discipline out in the marketplace about how companies are presenting their primary financial statements, particularly the income statement. And I think there's a significant need to try and bring some greater consistency in there, particularly I think in the light also of increasing use of digital consumption of financial information as well. I think it's a really important project. That one is more advanced than the work that we are doing on business combinations under common control. And I think with the primary financial statements, you should expect to see us publishing a consultation document on the board's work to date, probably later on this year, the second half of this year. And obviously, we'd be very grateful to receive feedback from you all. Ultimately, the quality and the standards that we produce really rests upon the outreach and the feedback that we get from our stakeholders. And, that's a really important part of our process. So we look forward to hearing your views about any of those consultation papers that we'll be producing.
And on IFRS 17 as well, the board intends to issue a consultation document for the proposed deferral date as well as the targeted amendments. So if you have any comments and feedback on that as well, that would be very welcome.
That will be at the end of, sort of targeted to be around about the end of June. We're expecting to publish that exposure draft.
Hi, Henry and Omer. This is Sohail. My question, or I would request for your comment, would be on the primary financial statements. The board is working on improving the presentation and focusing on the performance under the project, the presentation of different subtotals. In this context, my comment would be that is there any consideration to present the revenue between realized and unrealized components? Because this is also an indicator of the performance of the company. So is there any consideration of this aspect by the board?
Can I just ask you for clarification there when you talk about the unrealized revenue? So what would your examples be there?
The revenue that has not been received in cash, that's reflected in the receivables. So it's unrealized at the balance sheet date, and it's reflective of the company's performance. So is there any consideration to bifurcate or to present this separately, the realized component and unrealized component?
Okay, so this is not a project that I'm directly involved in, but the way I would see this probably is to sort of say that through the new revenue standard IFRS 15, that provides you and the users in particular with greater insights, if you like, into the revenue versus the cash realization of the revenue. So under IFRS 15, one thing to highlight is that it introduced sort of a clearer distinction between the revenues for which you now have got receivables and the revenues for which you've recognized revenue, but there's something more than just uncertainty due to credit collection on that revenue. So for example, maybe